Interest rate hikes yet again from the Bank of Canada, and there's actually more to come. Yeah, I'm going to be breaking this all down for you on this week's reaction video. Now, if you are looking for some help on how to navigate this real estate market, especially in a volatile time like this where rates are changing basically like every few weeks at this point right now, you can book a call with me using the link that's right here. It's www.chatwithzen.com. Simply click on the date and a time that works best for you. And then when you see the prompt, fill in your name, email, mobile phone number, and the question you have for me, and then we'll chat then. Good day, Toronto. Welcome to another episode of Prime Properties TV. My name is Zhen, and I run and operate a RE/MAX in the Greater Toronto Area, on top of making awesome educational real estate content just like this one for you. And if you're enjoying the content, make sure we spread the knowledge by smashing the like button and subscribing to the Prime Properties channel. And the first and only article we will be reviewing this week is the talk of the last 24 hours. Bank of Canada hikes interest rates again. And there may be more to come. Uh-oh. I think we were kind of expecting one in July, given that, GDP was so high and CPI came in stronger. But this was definitely a shocker to I think most of the people out there, except for the bears who were just calling for rate hikes all day long. So right now the rate went up 25 bips or 0.25%. So now it's at 4.75%. And that moves most of the prime rate for banks at like 6.95. So anyone who kind of got like a mortgage, a variable mortgage, during the pandemic time, so it'd be like 6.95, usually minus 1%. So most people have like a 6% mortgage on the variable right now if it was from during the pandemic. Now, here's the thing I did highlight. While investors and economists thought there was a slight chance the Bank of Canada raised the rates now, the move nonetheless came as a surprise to the consensus view that the bank would probably do it later this year, meaning there's probably more to come. And a lot of the trading and investments known as swaps, so due to OIS, priced in at least one more rate hike by the end of the year, and it's even open to the possibility of one more past the 5.25% mark. So right now we're at 4.75, so they're saying that maybe there's another one at the end of the year, and there's very likely going to be one in July. So what does this mean for the real estate market, knowing we had a rate hike and potentially another one in July and maybe another one by the end of the year? It's going to scare a lot of people off because there's a lot of uncertainty about where the interest rates are. And it also doesn't help that the fixed rate mortgages have gone up in the last little bit in anticipation for this kind of rate hike, right? So if we look over here, you can see this is a chart that on the red line is how fast our rate hikes have gone. And this is the highest and fastest and the most we've seen in a very, very long time. And we thought we had a little stop in January. And this is why we had a little bit of momentum going back into the spring market. But now here we are because the inflation is very high and GDP came in stronger than normal. So a lot of the buyers who are out there are going to be a little bit scared of what's going on. Now, what I will say though is anybody who got a rate hold, call it in like late April, where rates were still like a 3-year fix was still about like 4.8%, is probably still going to want to use that maybe because right now we get a fix that's about like 5.1 or maybe like 5.05 even for personal use, right? So rates have gone up like 25, 35 basis points on the fixed side. Now the variable, because most people aren't really buying with a variable right now, is just going to affect those who basically have a Scotia mortgage where their payments go up a little bit more. Is this 25 basis points going to make a difference for a lot of the people who need to sell if they're at all the banks other than Scotia? Probably not, because another 25 basis points to their negative amortization is not going to mean much, right? Even if they add another 25, right? But maybe some will come sell out, but I don't think it's going to be a ton, right? But it's the Scotia ones who are saying, oh, you know what? If there's another one in July and there's another one coming at the end of the year, it's a time for me to liquidate. And that's going to be, I think, it's the thoughts that are percolating in investors' kind of mindset, especially for the condo investors who are maybe like already cash flow negative, like $1,000 already right now. Now you can see this chart I have over here is what I was saying about why I'm not too concerned about like how it's going to crash or anything. Like this is the same effect that we had previously with all the rate hikes. And you can see in this blue line, this is basically the variable mortgages by origination. And no one's really been getting a more variable on mortgage since like, call it Q1 of 2022. And most people have been getting the orange one, which is the 3-year fix, which makes up, like 80%, like the fix makes up 80% of all the mortgages. So anyone who bought recently, looking hindsight now, probably like, okay, I actually got a perfect time, was able to sell a home, buy a home, I'm good to go. And anyone who's buying forward, if you have a rate hold, you're actually getting a deal because your rate's a little bit lower. So we may get a little bit of spurt of activity for the remainder of June. But like I was saying, I'm pretty sure that the June numbers were going to be lower than May. And given this rate hike, May was probably the peak for 2023, knowing that there's a looming recession coming, right? Now, here's kind of the 5-year government bond yield, which kind of dictates the 5-year fixed rate. And you can see basically it just went up, which is what's dictating the fixed rate. And it's the same thing for the 3-year fixed right now. So, right now I'm seeing like 5.25, 5.3 for a lot of like mortgages right now. And they actually just went up for a lot of the major banks in the last like 2-3 days as well, right? So whenever the banks get an opportunity to increase their fixed, they definitely will do so. And probably we're not going to see the fix come down, nor the government bond yield come down for a little bit. So which is why I think we're now in a more elevated mortgage rate environment for the next little bit until we kind of see a little bit of softening with the GDP numbers and the inflation numbers. And then the final chart I have here is what we are basically calling, the recession that's coming. So whenever the 2 and the 10 is inverted, meaning it's below this, black line, again, I'm not going to go overly complicated. It just means a chance of a recession coming, right? So this was the 08 one. This is the 2019 repo situation. And this is where we are right now. We're like 100 basis points inverted. So it's not like about, are we going to get a recession? Like a lot of indicators are saying, when are we going to get the recession, right? Like we could be in one right now, depending on what the GDP for Q2 looks like, right? So when we see housing kind of get grind to a slowdown in the next, call it few months, summer's going to be extra slow, I would imagine. And where fall is going to be is really be driven by the sentiment. If the June CPI does come around with a pretty low number, and we'll find out in like, mid-July or so, and we have that base effect rollover, it may be a little bit better. Maybe they won't rate hike, right, in July, which is July 12th, I believe. But if we do see some pretty bad numbers coming in the next few weeks, I would not be surprised if we see a rate hike. And then that sentiment rolling into fall is probably not going to be a very good fall market, right? And as with what I've been saying for a very long time, if there is new input, there needs to be new output. And this June rate hike is kind of rather a new input just because most people were expecting one until July. So things could always change the next few months. And again, I would watch the months of inventory to dictate where the prices are going. I did expect that there would be an inflection point in June where the months of inventory in GTA would be rising. Now the question we always should be asking ourselves is how quickly is it going to rise? How much inventory are going to get come fall? Because right now, for active listings, we're about the average for the last 5 years. So it's not like we're really suppressed in inventory anymore. The real question is this rate hike going to change the sentiment of some of these sellers? And are they going to come to the market in a slower summer market and that inventory builds up? That I will monitor for you, so make sure to stay tuned. Anyways, hope this gives you an idea of what the heck is going on right now, because this is definitely a new type of input. And if you are looking for some help on how to navigate this real estate market and understand some of this data on how that impacts your decision on how to transact real estate, you can book a call with me using the link that's right here, www.chatwithzen.com. Until next time, your move, your future. See ya! Now that I'm done watching this video, I think you should check out this video. And you know what? Why don't you check out this video too?